to look out for, I think, at the moment. I think US markets, obviously, S&P's down 15% from the highs of just a month or two ago, and I think there may be a little further to go. I wouldn't be surprised. There's still some money around, lots of money. We'll be buying some dips, and we've seen a little buying going on this morning. But I think it's still a sell the rally rather than a buy the dip situation for the moment. I wouldn't be surprised to see it lower than it's been for a while. And I would be looking probably on an hourly 30-minute chart, I want to talk about this later, to try and pick those opportunities. But I think equity's down. Gold has had a really good run, getting towards 2,000, and I'm not convinced it's going to go a lot further, but I may be wrong. I quite enjoy currencies. They're not too volatile. They don't trade more than 0.2% a day. They're much more controlled. As long as you understand leverage, there are opportunities there. And I like the big macro fundamentals in terms of, strong dollar, strong euro, whatever it might be, which again is forming nice trends. And again, try to pick a week's worth of a move, 200-300 pips if I can, from those sort of moves. I'm not really looking at individual shares. For me, trading individual shares is quite dangerous because there are gaps in a short-term volatility. We had recently with the earnings season, we've had several company shares in the UK, in the US, opening 5, 10, 20% lower the following morning. And that's not something you want to be stuck at when you've got a 1% stop. So I tend to stay away from individual shares. As I say, I'm a fan of liquid markets, tight spreads, international macro affected markets. So for me, I really focus on gold and oil, FX markets, the top 5 or 6 currency pairs really, and DAX, Dow, S&P, NASDAQ a touch, and the FTSE. So for me, we know that the US markets have outperformed. I think people have got very overexcited about the earnings from US companies, quite rightly, because they've been phenomenal. But just in the last couple of months, I think it's a classic sign of the end of a bull market where the economy is very strong, but expectations are even higher. We've seen that already. I mean, the S&P, we should have been doing this 2 months ago because the S&P is already down 15%. But as I said earlier, I think there's more to go. So I'm looking for selling opportunities in the S&P. I've done it for a few months, and the first couple of trades didn't go quite right because the S&P hadn't quite finished going up. But since then, it's been a lot better. And I still think, and I'm not, as I said, I know there's going to be some buying. There's plenty of money out there, and there will be some buying of dips. But I think the money's to be made in selling of the rallies. So not particularly, I'm not looking so much at not European markets, but UK. UK is a real laggard. It hasn't, the FTSE hasn't yet reached the highs pre-COVID. So it's miles behind the US markets, obviously for various reasons. But now we've got energy prices going up. That's boosting the FTSE. And so there are some fundamental reasons why I'm not looking to short the FTSE. I am looking to look at short opportunities for the time being. Maybe in 3 or 4 months' time we find a base and we go back up again. So that will conflict with other longer-term views. But for me, at the moment, I'm looking for shorts in American indices. I'm avoiding Bitcoin and the crypto because it's just a little bit too much. 10% in an hour is a bit too much for me to stomach. And I'll always keep an eye on currencies because I think they're a very good barometer of the macro picture, and they also react very reliably to big macroeconomic news. So the big red events on the macro calendar, particularly FOMC. I don't like non-farm payrolls, but we can often get a nice move where you put a straddle around that, maybe options or just buying above, selling below, and you can just have a small 1-to-1, 1.5-to-1 risk reward. And these certainly have been in recent times very productive. So that's the kind of thing I'm looking for.